Good morning, good afternoon, everybody. Welcome to our usual Wednesday live session where we analyze what's going on in the market and take questions from you. And right, recently we just made some a little changes in the time. As you can as you have noticed, today we're starting a couple of hours later than usual. Why? Because this is a time of the day when that's usually a lot of interesting data coming out. Give me a second. Yeah, you are probably one of us listening to me from I know some respect. So let me do one thing. Madam Monsieur, because I think there's a problem with the audio, so we are gonna try to solve it probably in another moment. And to this headphone, can you see me clear now? The voice is not clear. Can you? I don't know, Keisha, can you hear me right now? Hello, hello. It's taking it from, we can hear you. All right, so from go to webinar, they can hear me. Let's stream, what about you? You should be able. Better, isn't it? Isn't it better now? Let me know. Can you hear me better now? You should take the audio from a headset. So yeah, okay. Welcome, as I said, to the live session. We're gonna focus. Well, we're gonna talk a little bit about what's going on, but we're gonna focus on the inflation data. The inflation data that it's coming out soon in just 27 minutes from now. It's expected. It's an important data, as you know. It's very important because inflation has been the main concern, the main focus during months. Now it has started to raise dramatically. Well, more than 1 year ago, and it also has started to go down quite sharply, especially in the US. To be honest, it's less the case for Europe and for the UK, where it's much stickier. But yeah, in the US, we have arrived to a CPI on a yearly basis, year on year, to 3.2%. As you can, give me 1 second. Let me check one thing. What is this? No, sorry. Give me 1 second. I need to adjust the correct. No, this is not the correct one. This will be the correct one, as always, the last one. So yeah, here you are. Here you are also for the guys in Restream following us from the socials. I was saying has gone down not dramatically, but consistently in the US more than EU and UK. As you say, last data in July has shown just a 3.2 on the headline. Somehow stickier in the core component, 4.7%. The core component has been. Core component does not take into account energy and food. So yeah, we on this depends in large part also in some part future decisions of central banks that generally are thought to be, I believe, to be close to the end of a cycle, of a tightening cycle. But yeah, we must see how, especially how inflation will evolve. For example, you can see that for these months, market is expecting a pickup on the headline number from 3.2% to up to 3.6%. A serious pickup on the month-on-month number up to 0.6%. And yeah. So we must follow with attention. And here I just skip. I just swap to something different. This something different is oil. Commodity energy. One the most important for sure commodity in our societies, and it's going up and up and up. It has been going up during 2 months right now. Well, more than 2 months, because we really started on the 28th of June. It started from 67.40, and we are this is crude oil. We are close to 90. We're close to 90 on crude oil. $88.65 per barrel. Each 128 liters of crude cost that much after the cuts from Saudi Arabia, from Russia, from OPEC Plus, January, that have put out of the market a good portion of offer side of the supply. This couple of days we had reports both from the IEA last night, this morning, let's say, and the OPEC yesterday. With OPEC, you already know who they are, no? It's an organization of petroleum exporter, and it's a cartel that provide more than between 30 and 40% of overall oil around the world. And what they said in the monthly survey, in the outlook, is that OPEC data show 3 million barrel shortfall as Saudis extend cuts. All right. At the same time, they don't see a decrease in the global demand. In the global demand, on the other hand, they still see the demand growing by 2.4 million barrels per day during globally in 2023, and by 2.2 million barrels per day in 2024. What does this mean? This means basically that much less supply, higher demand despite of a green economy. 103 million barrels per day is the global demand. Just 10 million coming from US, about 10 million from China, and the result is. For example, oil raging higher, absolutely raging higher, breaking resistances, and probably heading above 90. By the way, I was talking about what OPEC told yesterday. So we are missing 3 million barrels. And from the supply side, while the demand is still growing. By the way, rigs in US are diminishing as well. But this morning, we had also the International Energy Administration, the official provider of data related to energy, oil. This is a US-based institution, publishing its outlook as well, and they say that only the OPEC from his cut, it has taken out of the market 2 million barrels per day of the free overall, but the same OPEC calculate in the world supply. And that the inventories plummeted by almost 80 million barrels. Inventories all around the world are at more than 1 year, 13 months low, have been at a 13 months low in August. So the situation is getting tight. In the oil market. This is pushing the price higher. On the commodity side, let's say it just started. It's just going on right now during the last 2 months. But this will be reflected. This will be reflected somewhere in the future, both on our gasoline and both on the price to production. For example, the prices for flying around, all of these kind of things. Provisions are made, anticipated always. So big corporations don't buy from one day to another, obviously. But this kind of surge in the prices will be should be reflected in the overall dynamics of prices. And by the way, a very sticky part of it are the services, apparently. Why? Because wages are still higher. Just today, there's the news of a wire of a possible strike of a big trade union in US. I think the name is, sorry, I don't remember it correctly, the name, it's UAW. It's the trade union defending the automotive industry. Why? They want pay rise up to 30%. By the way, nothing. This is not a joke. We've seen just a couple of days ago data from UK. Let me check if I'm able to show you here. Yes, this ones, you see, average earnings, including bonuses. Okay, now I jumped from US to UK. But the average earnings grow in UK are growing 8.5%, 8.5% on a trimestral basis, on a quarterly basis, respect to last year. Well, jumping from one side to the other, while there's 15 minutes left to CPI. This morning we had also GDP data from UK, not in recession, but a negative quote, a negative month. Also on a yearly basis, here I cannot see it immediately, but also on a yearly basis, it was disappointing. So UK is another of those countries in a serious, well, it's almost in a stagflation situation, to be honest. Yes, let me check if I'm able to move to. What is that? Sorry, So let's go back first to oil. Let's make some analysis about that. Technical analysis showing us that it's really has already starting, but it's healthy. Indicators are not overbought at all, and so there are more legs to go. Actually, by the way, it was reignited also by the fact that Russia will get out of the market 25 of a diesel supply during the next month in the autumn for infrastructural reason. It will be something temporary, but it had reignited the rally recently. And so here we don't have several agricultural commodities, but them as well, many of them, especially for example cattle for feeding animals, are skyrocketing. So yeah, and all right. Here we go. Let's wait. Well, let's see. First of all, let's see how and where indices, especially U.S. indices, are before before this data, but should and could cause some volatility. To be honest, here you go. Here you go in a consolidating phase, probably a kind of wedge triangle SP500 off the highs. Something very similar happens for the Dow Jones 30, and also for Nasdaq. Nasdaq was the heavier index yesterday. But as you can see, they are all in a similar situation. The similar situation technically is being under the pressure of it's not yet a downtrend because we are seeing, yes, lower highs, but also higher lows. So it's kind of triangle, indicating a lot of indecision right now. Yeah, why? Because the situation globally, despite US, globally is becoming more difficult. You know, in Europe, datas are quite bad. By the way, here is DAX. DAX has been lateral since March till now. Now approaching below a very important support, 15,700. Approaching the next and determinant one at 15,450, and also the 200 moving average, by the way, it's approaching. We are having continuously bad data from Germany, like the ZEV, the other day, that expectation, the current situation, according to the ZEV indicator. Let me check if I'm able to find it here. Here it is, minus 79.4. And this is a cyclical low, for example, very close to the levels just after the COVID crisis. Almost everything is going quite bad in Germany. The automotive industry is suffering. Recently, had probably you noticed that the car ferry of Munich, it has been well clear at the eyes of everybody that one of the biggest driver of the industrial locomotive that is Germany, the automotive industry, is losing its competitive advantage in this switch toward electric car. Is losing its competitive advantage toward in favor of China mainly. If China is there's plenty of new producers, but not only of China. There's also a company, VinFast, a Vietnamese company that went to the honor of Chronicles recently because its valuation skyrocketed above the valuation of giants like Ford, like Mercedes, and so on and so on. Just of today, Germany will revise its 2023 outlook to a contraction, in a contraction territory of up 0.3%. And yes. So the situation is slowing down for what the economic growth is related, but prices are still stickier. Here we are back to the data that will be out soon, and so actually, investors don't really know what is. How central banks will manage this. Generally, investor thinks that we are very close to the end of a tightening cycle, Well, you know that these days, from tomorrow on, all of the biggest central banks will take a decision about interest rates, and but people doesn't know, first of all, if they'll hike again, if they'll pause. Right now we're talking both about the Fed, the ECB. Well, Bank of England will hike definitely next week. But for example, this morning, okay, ECB will be next week, all right, on Thursday, and yeah, while up to this morning, it was quite consensus that ECB won't hike on next Thursday. This morning, a whistleblower let the newspaper, the media know that probably the forecast for inflation on 2024 will be raised on the meeting, and the probabilities of a hike by ECB jumped to 70%, and for sure they will hike again by the end of the year. Why? Because the prices are still sticky, and the long-term projections of ECB probably will be raised. What is this? This is Bund. This is the future on the 10-year Germany. You can see it's well, the yield on Germany right now is 2.68%, not at well, very close to the highs that have been at 2.71 in March. But on a price-wise, it's breaking down. It's breaking down, meaning an expectation to rates to raise to stay high, and maybe to go even a little bit higher in the near future. By the way, yeah, inflation in Europe is even stickier than in US. We have an headline at 5.3%, so almost 2 percentage points above the US one. And also the core inflation is higher. It's at 5.3%, so more than 1 percentage point. So yeah, there's a lot of uncertainty about the future steps of central banks generally. This is the 10-year treasury. Strangely enough, if you want, this is the 10-year yield. Strangely enough, the 10-year yield is the one who is showing more strength, like if the long-term rates have already topped. All right, but yeah, overall the picture is prices still high. Hopefully they won't go higher, and growth is slowing down. And this is the importance of today data. This is the importance of today data, because that hopefully we are not gonna go higher is the point. After 2 months of sorry, I have a lot of screens in here. After 2 months of commodities, some commodities prices going up, it would be important and hopeful that we don't see a rise also in actual inflation. Look at this. These are, for example, the inflation expectation. Okay, here you have both the Brent and the inflation expectation during the last days, and you see this pickup once again of almost 0.2. Well, here it is. Now in 2023, from 2.1 to almost 2.4% recently. These are long-term expectations, long-term for 10 years. These are the kind of things that central banks look more than the CPI and the CPI. And And always on this point, these are the expectation, for example, from Goldman Sachs. Goldman Sachs is seeing the core CPI, this is the core CPI, to reaccelerate on a monthly basis. Yes, this one, the light line, the lighter line. And this is even more worrying to me, because I would be more concerned about the headline CPI. Anyway, we're getting very theoretically, probably here. Where are you? Where is Restream? Let me check. I lost Restream here. Restream. Here we go. Please tell something about. Hi, sir. Could you please analyze dollar yen on the daily? Yes, sirs. Yes, sirs. Yes, sirs. Well, yes. Let's go. Let's go. We have a little bit of time, so very fast. Talking about dollar yen. Very fast before the data is out in few minutes, in 4 minutes from now. Dollar yen that have dropped at the beginning of this week. Have dropped at the beginning of this week on back of an interview given by Ueda, the governor, hinting to a normalization because of good data. But yeah, once again, it's structurally weak. Yen has a huge rate differential among any other currency, minus 0.1%. You get by investing in free risk Japanese assets, 525 by investing in US assets, probably 11 by investing in Mexican assets, for example. It's very used, this currency, massively for carry trade, meaning I sell yen for financing myself, and with that money I buy something, a different currency. And this is very much used also for emerging market carry trade. All right. So you see the blue zone. The blue zone is the intervention area of last year from 146 to 151. It's still an uptrend. We have an up channel. I don't think Bank of Japan is in a hurry for using more reserves for defending its currency right now. I mean, letting it getting weaker will also help them import inflation, and this is finally something that they would like. So, well, midterm, long term. Short midterm, sorry, it's gonna go higher, this thing, in my opinion. It can be obviously wrong, but be aware of the fact that we are close to the intervention zone. Sorry for being so fast on dollar yen. Let me switch back. Whoa, what's going on here? Let me switch back to the indices, because the data is out very soon. Let me stick to the main benchmark, BSP 500, and yeah, let's wait and see what is gonna happen. What is gonna happen here? Well, let me check. This must be almost out because well, this is what is happening. Going down consistently. The indices, at least, a lot of volatility. So don't take don't get to any premature conclusions. This looks like a strong price data, but yeah, it looks like a very strong one. 0.6, okay. 0.6. The consumer CPI month on month, 0.6, like expected. The core, you see, Goldman Sachs was right. The core plus 0.3 against plus 0.2 expected, worse than expected. Also the headline of a yearly basis, worse than expected, getting higher, 3.7 against 3.6 expected. Well, at least the core on a yearly basis is still well, 4.3 as expected. What's happened at least on a spread from 462 down $15 contract. It's even more sensitive to rates. Nasdaq is down from 15,300, all $75 and dropping $80 in this 1 minute. $80 is 0.5% in few seconds. Anyway, there will be some volatility. So yeah, always you always need not to. By the way, I'm making a video next week about how to react to data and how to react to data, not how to anticipate them. And when you're reacting to data, just let it breathe a little bit. Okay. Well, yeah, kind of an anticipation. What happened when there's volatility? Market makers just get the orders, get the market level out of a book, and this widen. So market moves faster, moves much faster. Anyway, the overall data, as you can see, has been bad. The very bad thing is the rise, in my opinion, in the core monthly, because the core doesn't take into account energy and food. And I suppose in the next month there will be more pressure in the headline, but it's already spiking a little bit higher. And this, of course, can be an anticipation for what's going to happen also in our economies, because the input prices are going up, and the overall prices are going up, and the central banks are trapped. So how dollar is reacting? Let's start with the dollar index. How dollar is reacting? Well, not much of movement, isn't it, in the dollar? Not much of movement, mostly sticky. Just a couple of cents higher, now a couple of cents lower. Well, so let's go to the euro dollar. What's happening here? Why I can see this chart so badly? So yeah, euro dollar is going higher, but very little. We're talking about 6-7 pips. So not a big reaction at all. Currencies, well, as we are here, let's have a look at cable. Well, I really don't know why I say in such a manner. In such a way, cable. Well, all right, we got it. Dollar moved. Dollar is little move. So let's go to see another very important thing that used to move when the data are out and our interest rate. What's going on the 10-year? 10-year. Well, once again, not a big movement. So it looks like the most affected is has been right now the indices. Now we will back to it. It's down just 6-7 cents. What does this mean? This means that yields are going higher. So yeah, because this is a bad data for central bank. As we are here, and I know that many of you are gold traders, and gold is related to dollar somehow. Well, so yields are going higher. Gold should go a little bit lower. Not that much. It started lower. Now it's going up again. Finally, just how much of difference since the release of the data. At the release of the data, it was at 1910, and now it's pushing higher, almost $1 higher than after the data. So yeah, not a big reaction for the majority of the assets, for the dollar, for the income, for the govies, for the gold, and what we were talking about before, not to let it breathe, not to get too fast conclusions. We left it just a couple. We left, for example, SP 500 just few minutes ago. How many of them? 3 minutes ago. We left it down $17 from the publication of the data at 4,444.43. It's recovering $20 in just a few minutes. You see, 1 minute has been enough. 1,460. Well, for going down from where it started before the data, for 1,460, to go down up to 4,443, so at 0.45%. And the last 6 minutes have been enough to recover all of this, And so, despite the data that has been quite bad for what it can mean for the future. Always this is a data point, one data point, so don't have to get once again to fast conclusions. Also with that, but there has been a pickup. There's been a pickup in the dynamic of prices. But yeah, market is still toasting. It's still toasting anyway. So yeah, at the moment, here we have the bigger 30 minutes candle in SP 500. Let's stick to Dow Jones. Well, it will be the same thing. Okay, let's stick to. Let's go back to Nasdaq. But it's performing a little bit weaker than the other two. Looks to me, at least, looking from the chart. You see a lot of movement. Anyway, a lot of movement. Let it breathe. Let the data dip into investor minds, and after 15 minutes, half an hour, get probably into the trade, take your conclusions, because it's random noise. At the beginning, it's random noise. Absolutely. Well, as here we were looking at Nasdaq as well. By the way, all of this, in all of this, the cash market, the cash US market is still closed. You see a lot of noise for nothing. 10 minutes ago, and where we are, exactly where we have been 10 minutes ago. Now, as here we are just on Nasdaq, let's switch to something different. Broadcom, yeah, Broadcom. Let's switch, for example, to Apple. Let's switch to Apple. We had the event yesterday. This event with a presentation of a new iPhone 15, the new iWatch. Now you can call somebody just by double touching your fingers. Amazing. And yeah, how is it going? It's not so. A lot of red candles lately. A lot of red candles also before the. Well, no, not before, because the event was going on yesterday while the market was the market was open while the event was going on. And it has been a red day. By the way, here we cannot see it, but volumes have been constantly high on red days since, if I can remember correctly, since June, since this candle. All right, so this is not a great sign. By the way, you can see the trend, this trend line that has been broken. You can see 175 and a little bit low, 173, as an important support level. So that will hold probably for some time. But yeah, technical. Well, it has been a huge rally, but another name that has been in the mouth of everybody lately, just few days ago, not Nvidia, sorry, I want to check Tesla. I was confused, puzzled by that chart. Here you see, not yesterday, but 2 days ago. First of all, the overall technical structure, a very wide channel. All right, we are also here off the lows. But yeah, we had a huge rally, 10% a couple of days ago. Why? What happened? Was JP Morgan or no, Morgan Stanley, sorry. Morgan Stanley upgraded massively the future perspective for Tesla. What's the... and by the way, today was a billion. Well, a US investor, sorry, I don't remember his name, that is seeing Tesla getting five times bigger in the next 7 years. Probably it's in its holdings, so probably it has in his portfolio for saying something like this. But anyway, you know, hello Leon, hello Hazad. Sorry, yes, I will go to the dollar, Swiss franc, just well, when I finish here with Tesla. Basically, we'll have just a fast look to how indices and dollar are performing after the data, because we have missing them. Well, anyway, about Tesla, the idea, the concept behind this upgrade is not the car by themselves, is the artificial intelligence system of self-driving systems they have been developing for years now, and this getting sophisticated. That is the real strength point probably of Tesla right now. It's getting more and more sophisticated, and probably this edge on the software they have for self-driving is what has taken the attention of of Morgan Stanley for sure, and of other investor as well. Yep. Tesla not far away from its recent highs. So, as I've been asked for dollar Swiss, let's do one thing. No, not show all. First of all, let's go back to have a look of how assets are performing after the data. Sale volatility. This is Dow Jones. You can see an up and down. We have set some highs and some lows in these 30 mini candles. 34,600. Let's be short to 34,700. Well, almost all the indices have set a range of 0.4%, I would say. Okay, this is the Dow Jones. This is Nasdaq. I suffer a little bit more because it should be more sensitive to rates than other things, than other indices in the SP 500. So overall, bad data. Let's wait. The US market will open in 45 minutes. So before I go actually to the this is the 10 years. The long-term rates are almost unchanged. What about the 2 years? Let me check. Well, the 2 years is going higher. There's some pressure on the short end of the curve if you above 5% once again. But So let's go back to the question. To the dollar again, the Swiss franc. Let me switch to that. Madame Messier. 1 second. 1 second. 1 second. And here we go. So overall, what is dollar doing? It's going up a little bit. By the way, shortly after the oil rally, the dollar rally started. But yeah, let's go to the dollar Swiss. Dollar Swiss, it's very nice. You're right, Sazat. First of all, what I will tell you is that SMB, the National Bank of Switzerland, National Bank, is governing next week, and yeah, it will probably, if I'm not wrong, it will probably raise rates to 2% from 1.75%. Okay, what they have been doing for a long time, it has been to use the reserves to maintain the dollar Swiss strong, and by this way fight against inflation. You see, the Swiss franc is incredibly strong, actually, right now, despite the banking crisis. You know, the banking crisis. Not the bank, but the fact that collapse, basically Credit Suisse collapsed, has been saved by the state and by UBS. But apparently, according to the last results of UBS, it has been a good deal. Record profits, 29 billions of profits the quarter. This is some balance sheet magics for this quarter for sure. And they also gave up the public help. Anyway, we want to be more pragmatic and see what is going on with dollar Swiss. Let's just stick to the technical analysis. And here we go about the technical analysis. We had a few weeks ago, the breakdown of a downtrend. It's clear. It's quite clear. All right. When this happens, it generally means 80%, 85%, 90% of the times that the previous trend, so that was a downtrend, a trend of strengthening at FIBO 61 retrace area. Well, I don't know which, probably you are considering from 0.91, I suppose, isn't it? So yeah, just focus on the movement of this summer. Yeah. Anyway, when the downtrend is broken, that means the vast majority of the time that the previous trend is not ruling anymore, is not alive anymore. This does not mean an inversion. This does not mean a reversion. It should consolidate. We could even, generally, when this kind of break happens, at some point after an initial rally, there could be even a counter move that would even, I don't think it will happen, even go back and test the broken trend line. All right. I don't think this will happen. I think, well, from now, let's see this. What is going on during the last week? During the last week, a lot of uncertainty before next week's central bank. But we have at least some very clear levels to work with on the short term. Let me check if I'm able to insert an object, a rectangle. Yes, here we go. Let me put it clearer. Wait, give me 1 sec, sorry. Okay, better this way. So we have some very nice level to work with. 89 of the down as a lower bound. And okay, I draw it up to basically 89 and 40, but we with beta probably sorry, yeah, at 40, but with beta consider 89 and 30, because you see that when the price got to 89 and 40, it has been always something so fast. Anyway, right now while we're speaking, we're identifying this 89 and 30 after the data. um, Dollar is it's clear that it's weakening right now after that initial move that we just checked a few minutes ago, and it looked like it was going up. Still a lot of volatility after the data, just 20 minutes gone. And yes, also the euro dollar is going higher on a 0,750, 107.50. Wow. Okay. Wow. Look at this. Anyway, so we should work around this level 0.89 and 0.8930 to 40. All right. Using this range, this is a short-term range for our intradays. All right. This will break at some point. It will break. I'm not sure if it will be this week or probably closer to the SMB decision that will be next week. Sorry. Hop. It will be next week. So set this. Let me delete this one. Set this after the break. We could understand if this resistance. This is daily resistance that I had on the chart at 89.30. Okay, will be broken, and so we would definitely have some more upside up to 90 probably, where also the 200 moving average will come, or if we will have a retest, most probably the retest could, well, the main long-term support is 88, but we will have some intermediate support if 0.89 will be broken. We have a first one at 88.6 and 88.30. Looks like each 30 pips. Oxazad. So yeah, the main point here to me is that the long-term trend has generally been broken. Let me check one more thing. Wow, what is this? What is this? What is this? Let me check one more thing. I don't know what's wrong now with my friend. MT4, MT5, sorry. What is wrong with you, my friend? Yeah, also if I try to identify, well, first of all, properties, let it be clear to anyone. Even if I try to identify more of a channel, to this, even if I try to do something like this, it looks, but actually the price is breaking. So the main thing to me is that from now on, I would prefer to buy low than to sell high. So I mean, prices go up and down. You can see even in a downtrend like it has been during this last months, during all this year, we had the down movement, up movement, down movement, up movement, and so on. So prices go up and down. But the fact that the price has broken would make me not more comfortable to be bearish long term on dollar Swiss franc. And so I would prefer to wait for lows, maybe on a 4 hours, 2 hour chart, 30 minutes, whatever, seeing some over sold situation, and buy low. Yeah, more than sell high. But it was I would have preferred to do during all 2023. CMB has been protecting his country, Switzerland, from inflation by selling reserves of dollars, of euro, and buying Swiss franc. in exchange for it. So a higher Swiss franc could guarantee a lower imported inflation. If you have a strong currency and you have to buy iPad in dollars from the US, your currency is strong. Finally, it will be less expensive for you to buy this iPad, this iPhone, whatever. But anyway, as we are in last 4 minutes of thank you, Sazad. US dollar CFA, FIBO 61 retrace area. But so write me in the chat. What is your point for dollar against Swiss franc? What are you thinking to do about it? Well, yes, dollar is weakening. Euro dollar up. After the data, dollar is weakening. Thank you, my dear. Dollar is weakening. Here's the euro dollar on a daily basis. We just published an analysis earlier this morning. It's under some moving average, but still well, even if technically it's not looking so good, still not dramatic at this point. Wow, fantastic! This is simply fantastic. Up, please, what? Cable rebounding from the 200 moving average. This red stuff is, you see what I was talking about, Sazad, what I was talking about, the break and the retest. I was talking about the dollar Swiss, about this. I look at the cable, it has broken much earlier than the dollar Swiss. It has gone consistently higher. From a break at 126 to 130, it has gone up more than 3%, and now it's retesting. It is in even lower the break. Okay. Yep. So yeah, let's have a last look of how the main assets are reacting to this data. That, just as a reminder, has been not dramatic, but not so good, because prices are going up more than expected, even in the headline component on a yearly basis and the core component on the monthly basis. So yeah, dollar is weakening a little bit. Let's say the long-term interest rate in US is the yield is going down. This is the price up, yield down. So it's relaxing, at least on the long end of the curve. Let's say also the short end of the curve is down again at 5%. It has rise up to 502. Fast look to the beloved gold. Gold gone mainly nowhere, still 1911. It has started at 1910. And finally, what indices are doing while we are still 30 minutes away from the open. Well, a lot of noise for nothing. Like, I think it was Shakespeare who was writing something similar. A lot of noise for nothing. SP 500 is, after having set a range of, well, 25, am I wrong? Am I correct? Yeah, 23 of $23, so something around 0.45%, is up just $4, so less than 0.1% from before the data, outperforming a little bit Dow Jones, Nasdaq going nowhere. So yeah, has been interesting. A lot of noise for nothing for now, but have a look at the cash open. Probably there will be a reaction, and most probably within the range that it has been drawn here. There will be more consistent movement for sure during the US session, during the US session. So, said all of this, Madame Messier, our hour together has gone by. I hope it has been somehow helpful for you. And yeah, that's it. That's it. That's it. Thank you very much for the time together. And may the pips be with you. Happy trading and profitous trading, especially. All right. Bye bye. Bye bye.